Hello everyone, welcome to the session on use of computers in finance. Consider this article from CIO.com, which was published in 2018. The article is about data storage in Indian market. The world's total data volume is growing exponentially every now and then, with sizable data pouring in from banking, insurance, telecom giants, as also from healthcare and automobile sectors and so on. The data storage market in India, as per the article, is projected to achieve a compound annual growth rate, that is CAGR, of more than 7% from 2016 to 2021. Such high volume of data helps many businesses and industries, especially financial industry, analyze the data and make critical decisions, which will help them to improve their businesses and growth further. The advancement in the computer and information technology plays a major role in this data storage and information distribution. This leads to our session on the use of computers in finance. By the end of this session, as a learner, you will be able to explain the use of computers with respect to data storage, outline the advantages of using computers with respect to financial information, and illustrate use of statistical software tools or programs in the finance. We will learn each one in detail now. Let me begin with our first learning objective. We shall see the usage of computers in finance with respect to data storage. The discovery of computers has transformed the financial industry and how the business deals are transacted. Computers influence both business and personal financial management. Computers are capable of enhancing financial communication among all the members of the organization through a network system connecting various departments. The network system connects purchase department, accounts department, finance department, and marketing department. If you want to have any information related to payment, purchase, or advertisement expenses, all this communication can be distributed through the network system so as to be available for all the departments. With the use of computers, key financial decision makers are able to send any financial reports to the stakeholders instead of holding meetings. This type of network system allows the people in financial sector to get continuous updates on the world stock exchange and moving price changes affecting their business. Now we will understand the advantages of the usage of computers for data storage. Computerization makes data storage manageable and less bulky. Computers enable organizations to store large amount of files in a small space. This allows the companies to have a track of financial transactions while avoiding consumption of space that would otherwise be consumed by piles of files and cabinets. Keeping financial records is critical for organizations as well as individuals, as it allows tracking of payment records, debts owed, purchases done, and bank transactions made, and so on. For example, no accountant in this modern era uses manual ledger to prepare financial statement. At the very least, basic simple spreadsheet is used by an accountant to keep and maintain books of accounts, and then he can extract the financial statement from it. Technology has made the process of preparing financial statement as simple as inputting data and then clicking a single button. ERP SAP system, that is a business process management software, will automatically generate accounting report by the click of few buttons with the enough information already keyed in. Detailed financial records facilitate an organization to continually monitor, audit, and analyze business performance. So far, we have learned the use of computer with respect to data storage. Now we will move on to learn our second learning objective, that is advantages of using computers with respect to financial information. Computers have enhanced access to wide financial information through internet access. Business operators or individuals can access information on investment prospects and conduct a detailed research on profitability. For example, mutual fund companies use social media platforms such as WhatsApp and other applications to facilitate ease of transactions for the customers. Axis Mutual Fund's Easy Services provides its customers the option to invest in schemes through an app. Customers can monitor their investments and perform transactions on the go. There is also a wide financial information available on the internet such as price changes, tax changes, inflation rate, and currency exchange rates, making it easier for institutions and individuals to make informed financial decisions. The internet provides a wide sources of information and access to specific financial reports of companies in trade. Thus, so far you have learned the advantages of using computers with respect to financial information. Now we will move on to our third learning objective, that is use of statistical software tools or programs in the finance. Consider the example. Company XYZ must decide whether to purchase a machinery equipment for rupees 3 lakh. The equipment would only last 3 years, but it is expected to generate rupees 1.5 lakhs of additional annual profit during those 3 years. The company also planned to sell the equipment for scrap afterward for rupees 10,000 approximately. Now, how can the company say that the equipment purchase is a better choice? Using internal rate of return, that is IRR method, the company can determine whether the equipment purchase is a better use of its cash than its other investment options, which should return about 10%. IRR, that is internal rate of return, is a measure of an investment's rate of return. It is calculated by the formula IRR is equal to summation of CT divided by 1 plus R to whole power T minus Z0. If we use this formula, we can find the internal rate of return. That is, the value we get for IRR is 24.31%. The IRR equation looks as given: 0 equal to minus 3 lakh plus 1,50,000 divided by 1 plus 0.2431 plus 1.5 lakhs divided by 1 plus 0.2431 whole square plus 1.5 lakhs divided by 1 plus 0.2431 to the power 3 plus 10,000 divided by 1 plus 0.2431 whole power of 4. This equation tells us that with this IRR, the present value of the investment's cash flows is equal to 0. From the financial standpoint, company XYZ should purchase the equipment since this generates 24.31 return for the company, which is much higher than the 10% return available from other investments. Although the calculation seems to be small, it needs time and efforts of a person who calculates. But the same calculation can be done easily using the statistical software programs available. For example, finding the IRR using Excel is easier one. Enter the cash flows in the cells A1 to A5 in the spreadsheet and then type in the functional command is equal to IRR within brackets A1 to A5 in the cell CX, in the cell A6. After keying the enter key, we will get the IRR value. So this is how it is very simple to calculate IRR using the Excel. Similarly, we can use many other such statistical software programs such as SAS, that is SAS, R and so on. Statistical software is specialized computer program for analysis in statistics and econometrics, finance, retail and so on. In the case of large data, the manual calculations become tedious and it is a time-taking process. whereas the statistical software tools or programs help in dealing with large volume of data for making huge analysis. So far you have learned the use of statistical software tools or programs in the finance. Now we will summarize whatever you have learned so far. First, we learned the use of computers with respect to data storage. Computers store large amount of data with less space and helps us to track transactions, especially financial transactions worldwide. Then we have learned advantages of using computers with respect to financial information. There is a wide financial information available on the internet, which makes it easier for institutions and individuals to make informed financial decisions quickly. Then we have learned the use of statistical software tools or programs in finance. Statistical software is specialized computer program for analysis in statistics, econometrics, finance, retail, etc. Few such tools are SAS and R and so on. Now let me give you an activity to reinforce your learnings. Examine any two financial companies. How do they send any information related to finance to their customers? Examine in your organization how any financial information is sent to the stakeholders. Discuss with your friends for further learning.